All right, good morning, everyone. It is 8:44 on the morning of October 21st, 2022, and this is my pre-market strategy session. So, the title of the video is Q's opening beneath the neckline. And so, the neckline that I have here is this red trend line right here. And the reason I call it a neckline is because I see a head and shoulders reversal pattern here. And this is a long-term chart formation. Once a head and shoulders pops in, and this is a true head and shoulders. This isn't a head and shoulders. There are a lot of people who have head and shoulders patterns on their charts that aren't actually true head and shoulders patterns. This one is an actual head and shoulders pattern, quite a bit like Baba here. And so you can see left shoulder, head, right shoulder's beneath the left shoulder, comes down, breaks the neckline. Baba is a little bit of a particular situation. I did trade Baba back here in this range. And what happened during, I wound up cutting that short. I did make money on it, but it wasn't as profitable. There was the potential of a delisting happening with Baba. And so it wasn't a good place to trade. I wasn't in a good spot to trade because if the news came out that it was not going to be delisted, which was the case, then it was going to rally. And I was already in a short position. Also, I needed to get out of it because if it was going to be delisted, I was going to be stuck with a loss either way. So I had to get out of it. But eventually, you can see here, it was decided it was not going to be delisted, and Baba has just been on a downward trend ever since. And this is 2 years old now, going on, right at 2 years old, and the Qs are setting up for the same thing. Let's see, hit the peak here in November of 21, and here we are in October of 22. So this is a year-long pattern. And there's about another year of this pattern to play out. This neckline will continue. The downward trajectory on the Qs will be sustained. So this morning, you can see here, it might be kind of hard to see. There's an orange pre-market $265.84 is where it is right now, and that's below the neckline. So it's looking like it's going to be a bearish day. If we come up here, I'm going to look at it on the 10-minute. And so it's really quite possible we could see this thing rally up a few points. But the neckline is going to be where I will definitely start taking a lot of short positions, start putting on a lot of short positions. So that's the plan for today. I want to do my best to time it so that it goes into overbought conditions to sell the rip, but we'll see. I don't know if we'll get that at this point in time. It could just be a day for the Qs to plummet. I mean, 255, that's 10 points lower. That's where it opened up roughly on the 13th. Let's see, the 13th was a Thursday last week. So, it's looking really bearish. Bitcoin. Bitcoin's days were numbered, and this right over here, this date roughly around the 30th at the end of the month, was where I was putting kind of like this is the last spot where it can, if it breaks out and breaks up above right here at this spot right here, we're in a new trend, but it's not going to do that. It's headed down. Another head and shoulders reversal pattern and another neckline. Right here, this red line right here is the neckline, and this will be basically, the trend for probably about a year on Bitcoin. I think that given, let's see, this is February, so we're at the end of October. This is in mid February, so November, December, January, February, another 4 months. We'll be down here around, within the next 4 months or so, we'll be down here in the 13,000 area on Bitcoin. Also, let's see, here's oil. I don't have a head and shoulders on oil, but commodities in general, when we're going into tough economic times, there's less demand for oil. Less demand for oil means lower prices. There are some different forces on oil, being that oil production is tightening with OPEC tightening. OPEC does its forecast too, and so if OPEC is seeing that, if OPEC is seeing that demand is falling, then OPEC is going to cut production. They don't want to price themselves out of profitability, out of margin. So it's really quite possible we could see oil move sideways for a significant amount of time here. But eventually, yeah, oil is going to come back down in price too. So, and the VIX is elevated. The VIX is still over 30. It went right down to the bottom of the risk range yesterday at 29.67. Got really close to 29.67. So it looks to me like the VIX is ready to start running back up again. Yeah, it's time to start getting pretty bearish in the trades. That's my opinion. All right, everybody. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you on Monday morning's strategy session. Have a great weekend, everyone. Thanks for tuning in. I am out.